Stablecoins were once seen as the most stable corner of the crypto world, bridging digital assets and real money. But things are changing fast. In 2025, new global laws are shaking up how stablecoins work, how they're issued, and even who's allowed to use them. These changes affect not just companies, but every crypto holder out there. Let's explore what's really happening, what Trump's Genius Act means, and what you should be doing to stay ahead of this worldwide crackdown. The video is going to be very valuable for you, so make sure you stick till the end. Let's get started. What exactly is a stablecoin, and why regulators are waking up? Stablecoins are digital currencies designed to maintain a steady value, often pegged to a traditional currency like the US dollar. They became extremely popular because they offered stability in the volatile world of crypto, acting as a bridge between decentralized finance and traditional banking. However, regulators have grown increasingly concerned about their scale and potential impact on global financial systems. Stablecoins now move trillions of dollars annually, rivaling traditional payment networks. The US takes the lead, the Genius Act. The biggest headline this year came from the US, where President Donald Trump signed the Genius Act, short for Guiding and Establishing National Innovation for US Stablecoins. This new law marks a turning point for American crypto regulation. It officially defines what a payment stablecoin is and places strict rules on who can issue one. The Genius Act allows only licensed banks, credit unions, and federally approved non-bank issuers to offer stablecoins in the United States. It also separates stablecoins from securities and commodities, giving them their own regulatory framework. For ordinary crypto users, this means that stablecoins will become more trustworthy, but also more regulated. For companies, it means they'll need federal approval before launching any stablecoin products. Europe, the UK, and Asia, the global wave of regulation. The US might be leading the charge, but the stablecoin crackdown is now a global trend. In Europe, the MiCA, Markets in Crypto Assets, regulation became law, setting detailed rules on how stablecoins must be backed and audited. The European Central Bank wants to ensure that any coin circulating in Europe is fully transparent and can be redeemed for cash at any time. Across Asia, Hong Kong's Monetary Authority has released new licensing rules for stablecoin issuers, requiring them to follow strict anti-money laundering and security standards. Even Australia is preparing similar frameworks, focusing on investor protection and cross-border compliance. Why crypto holders and issuers should be concerned. For crypto users and businesses, these changes mean one thing: the era of unregulated stablecoins is over. Issuers now face heavy compliance demands, including mandatory audits, licensing, and full transparency on their reserves. Those who fail to meet the standards risk being banned or fined. For everyday holders, the concern is that some popular stablecoins might disappear from certain countries or face redemption problems. You might wake up one day and find your favorite coin delisted from exchanges due to new laws. The crackdown could also reduce global liquidity, making stablecoins harder to move across borders. Simply put, the convenience and freedom that once defined stablecoins are being replaced with bureaucracy and oversight. Key regulatory features you must know. So, what exactly do these new laws demand? First, most countries now require stablecoins to be fully backed by high-quality assets like cash or government bonds, not risky securities. Second, issuers must guarantee redemption rights, meaning users should be able to swap their stablecoins for real money anytime. Third, licensing is now mandatory. Companies can't just issue stablecoins from their garages anymore. They need government approval and regular audits. Lastly, strict anti-money laundering and Know Your Customer (KYC) measures are now standard, especially in regions like Hong Kong. Hong Kong and Australia, the Asia-Pacific approach. Asia is rapidly catching up with Western regulators. In Hong Kong, stablecoin issuers must now register with the local monetary authority and prove they have strong anti-money laundering systems. They also have to verify the identities of wallet users, even those using unhosted wallets. This makes Hong Kong one of the strictest environments for stablecoins in Asia. Australia is taking a more measured path, but still plans to introduce its own stablecoin licensing system soon. The country is working with the Financial Stability Board to align its standards with global norms. What crypto holders and issuers should do now. If you're in crypto, now is the time to act smart. First, review your stablecoin portfolio. Check if the coins you use are issued by compliant, licensed entities. Next, stay updated on your country's new rules. Laws are changing quickly, and ignorance won't protect you from penalties. If you're a business or developer planning to launch a stablecoin project, start preparing for audits, licensing, and reserve disclosures right now. Transparency will be your biggest asset. For traders, it's wise to diversify your holdings and not rely on one stablecoin alone. As regulations tighten, some coins might lose liquidity or get delisted. The future of stablecoins: control or innovation? Looking ahead, stablecoins are entering a new phase, one defined by government oversight and stricter rules. This could bring both challenges and opportunities. On one hand, increased regulation might make stablecoins safer and more credible in the eyes of traditional investors. On the other hand, it might stifle innovation and limit decentralization, the very spirit of crypto. The future will likely see a split: regulated, government-approved stablecoins for mainstream use, and smaller, decentralized alternatives for those seeking independence. If you use stablecoins, don't wait until new laws surprise you. Review your holdings, check your issuer's compliance, and stay updated on upcoming regulations. If you're building in crypto, start aligning your projects with the new legal frameworks. If you found this helpful, share it with your crypto community and stay updated with us for the latest on digital assets.